Have you ever looked at your bank account and quietly wondered why financial freedom feels so far away? You work consistently. You earn money. You try to save. And yet somehow it never feels like enough. It's like running on a treadmill. You're putting in effort every single day, but you're not actually getting anywhere. Now imagine something different. What if you had $500,000 sitting in the bank, and you never had to work another day in your life? No alarm clocks, no stressful meetings, no trading your time for a paycheck. Just complete control over your time every single day. Most people would immediately dismiss this idea. They'd say it's unrealistic, even naive. After all, we've been taught that you need millions, plural, to ever reach that level of freedom. But what if that belief is the real problem? What if the reason financial independence feels impossible is not because you don't have enough money, but because you've been thinking about money the wrong way? Because the truth is, financial freedom isn't reserved for millionaires. It's reserved for people who understand how money actually works. For most of your life, you've probably been told the same thing over and over again. Work hard. Save as much as you can. And one day, maybe, you'll be able to retire comfortably. But there's always a catch. That comfortable retirement supposedly requires $1 million, $2 million, sometimes even $5 million or more. And if you don't hit those numbers, you're told to keep working, keep grinding, keep delaying your life. The problem is, those numbers were never really based on your life. They were based on fear. Fear of running out of money. Fear of uncertainty. Fear of not being safe enough. So people keep raising the target higher and higher, just to feel secure. But here's what most people don't realize. There are individuals right now, today, living peaceful, flexible, and genuinely fulfilling lives, with far less than $1 million. Not because they got lucky. Not because they discovered some secret investment hack. But because they understand one simple idea. You don't need more money. You need a better relationship with money. Instead of asking, how much money do I need to feel rich? They ask, how much money do I actually need to live the life I want? And that question changes everything. Because the moment you stop chasing an arbitrary number, you start designing a life that actually fits you. When most people think about wealth, their minds immediately go to images of excess. Luxury cars, designer clothes, massive homes, first-class flights and five-star experiences. And for a moment, it feels convincing. It feels like that's the destination, like that's what success is supposed to look like. But if you look closer, something doesn't quite add up. There are people who have all of those things and are still stressed, overworked, and financially trapped. They earn a lot, but they also spend a lot. They look rich, but they don't feel free. Now compare that to someone else. They wake up without an alarm. They don't rush through traffic. They don't worry about paying next month's bills. They choose how to spend their time. They choose what to work on, if they work at all. They may not have a luxury lifestyle, but they have something far more valuable. Control. This is where the definition of wealth completely shifts. Wealth is not about what you own. It's about what you can choose. The ability to say no without fear. The ability to walk away from things that don't serve you. The ability to spend your time the way you truly want. Because at the end of the day, money is just a tool. And the real purpose of that tool is not to impress other people. It's to give you freedom. At the core of financial freedom, there is one principle that is so simple, most people completely overlook it. If your passive income can cover your living expenses. You no longer need to work for money. That's it. Not millions in the bank. Not some perfect retirement plan. Not decades of grinding until you're exhausted. Just one equation. Money coming in greater or equal to money going out. But here where people get it wrong. They focus entirely on increasing the left side of that equation, earning more. They chase promotions. They switch jobs. They hustle for higher income. And while that can help, it doesn't solve the real problem. Because as income goes up, spending usually follows. A bigger salary leads to a bigger apartment, a nicer car, more expensive habits. And suddenly, despite earning more than ever, they're still stuck in the same cycle. Financial freedom doesn't come from how much you earn. It comes from the gap between what you earn passively and what you spend consistently. Imagine two people. One earns $10,000 per month, but spends $9,500. The other earns $3,000 per month, but spends $2,000. The second person is far closer to freedom. Why? Because they've created margin. And margin is where freedom lives. Once your investments start generating enough to cover your basic life, everything changes. You stop making decisions out of desperation. You stop tolerating things you hate just to survive. You stop trading your time for money. And for the first time, your life becomes something you design, not something you endure. Now let's take this idea out of theory and look at the actual numbers. Because this is where things stop feeling abstract and start becoming real. Imagine you have $500,000 invested. Not sitting idle. Not losing value to inflation. But actively working for you. Scenario 1. Conservative approach. Let's say you invest in relatively safe assets. Bonds. High-yield savings. Low-risk funds. These might generate around 5% annually. That means $500,000 times 5% equals $25,000 per year, or just over $2,000 per month. At first glance, that might not sound impressive. But remember, this is money you didn't work for. No commuting. No deadlines. No boss. Just income generated quietly in the background. For someone with a simple lifestyle or living in a lower-cost area, this alone could already cover the basics. Scenario 2. Balanced investment strategy. Now, if you're willing to take on a bit more risk, for example, investing in a mix of stocks and bonds, your long-term average return could reach around 8% per year. That changes everything. $500,000 times 8% equals $40,000 per year. Roughly $300 per month. Now you're no longer just surviving. You're living. You can travel occasionally. Pursue hobbies. Support things you care about. All without relying on a traditional job. But here's the part most people miss. These numbers sound powerful, but they come with responsibility. Because in the real world, markets fluctuate. Returns are not guaranteed and withdrawing too much too quickly can damage your portfolio. That's why many financial experts follow a more conservative guideline, often called the safe withdrawal rate. Instead of spending 8%, they suggest closer to 4% per year to make your money last long-term. That would mean 500,000 times $4% equals $20,000 per year. Around $1,600 per month. So what does this tell us? It doesn't mean the idea is wrong. It means the idea needs to be understood correctly. $500,000 can absolutely move you toward financial freedom. But whether it's enough depends entirely on how you live, how you invest, and how disciplined you are over time. At this point, most people start focusing on one question: is $500,000 enough? But that's actually the wrong question. The better and far more uncomfortable question is, how much do you actually need to live? Because here's the reality. Two people can have the exact same amount of money and live completely different lives. Imagine this. Person A needs $10,000 per month to maintain their lifestyle. Person B needs only $3,000 per month, even if both have $500,000 invested. Person B is dramatically closer to freedom. Why? Because freedom is not determined by how much you have. It's determined by how much you need. This is where something called lifestyle inflation quietly takes over. As people earn more, they don't just save more. They upgrade everything. A better apartment becomes a luxury condo. A reliable car becomes a status symbol. Occasional dining becomes a daily habit. And over time, their expenses expand to match or even exceed their income. They're not building freedom. They're building a more expensive version of the same cage. And the most dangerous part, it feels normal, because everyone around them is doing the same thing. But if you take a step back and look honestly, how much of that spending actually improves your life? And how much of it is just habit or pressure or distraction? This is not about deprivation. It's not about cutting out everything enjoyable. It's about awareness. Because every dollar you spend is doing one of two things: buying a short moment of comfort, or buying a piece of your future freedom. And once you start seeing money that way, your decisions begin to change. Not out of force, but out of clarity. Most people believe their financial situation would improve if they just earned more. A higher salary, a better job, another stream of income. And while that sounds logical, it often leads to the same outcome. Because without changing habits, more income doesn't create freedom. It just scales the problem. Think about it. Someone earning $3,000 per month might struggle to save. But someone earning $10,000 per month can still be broke if they spend $10,500. This is why income alone is not the solution. Habits are. Take a simple example. Over a lifetime, many people will buy multiple cars, finance them with interest, pay for insurance, maintenance, fuel. When you add it all up, it can easily exceed hundreds of thousands of dollars. Now consider something even smaller. Spending just $10 a day on convenience. Coffee, takeout, small impulse purchases. That's about $3,600 per year. Invested consistently over decades, that money could grow into something massive. But instead it disappears, quietly, repeatedly, almost invisibly. This is how most people lose their financial future. Not through one big mistake, but through thousands of small, unconscious decisions. And here the key insight. You don't need to eliminate joy from your life. You just need to stop spending on things that don't actually add value. Because once your spending aligns with what truly matters, saving no longer feels like sacrifice. It feels like progress. When people hear the number $500,000, their first reaction is usually the same. That's impossible. It feels too big, too far away, too unrealistic to even attempt. And because of that, most people never start. But here's what they're missing. Wealth is almost never built in one big moment. It's built through small, consistent actions over time. Let's break it down. If someone saves $2,000 per month, they could reach $500,000 in roughly 15-20 years, depending on investment growth. That might sound like a long time, but time is going to pass anyway. The real question is, when those 15-20 years are gone, will you have something to show for it? And here's the important part. You don't need to start at $2,000. Maybe you start with $200 per month, or even $50. What matters is not the amount. It's the habit. Because once you begin, you become more aware of your spending. You look for ways to increase income. You start thinking long-term instead of short-term. And over time, that small number grows. You might get a raise, build a side income, cut unnecessary expenses, and gradually, your monthly investment increases. This is how momentum is created. Not through intensity, but through consistency. And eventually, something shifts. You stop feeling like you're chasing money and start feeling like you're building something real. At some point in this journey, a subtle but powerful shift begins to happen. You stop seeing money as something to spend and start seeing it as something to deploy. Most people live as consumers. They earn money and then exchange it for things. A new phone, a nicer outfit, a more convenient lifestyle. And once that money is spent, it's gone. But investors think differently. They ask a simple question. How can this money continue to work for me? Instead of spending $1,000 on something temporary, they ask, what would this $1,000 become if I invested it? Because to an investor, money is not just money. It's a tool, a worker, a seed that can grow into something much larger over time. Imagine every dollar you own as an employee. You can either spend it and it disappears forever, or invest it and it keeps generating more dollars. At first, the difference seems small, but over time it becomes massive. Because while consumers keep resetting to zero, investors keep building momentum. This doesn't mean you never spend money. It means you become intentional. You spend on things that truly matter to you, and you invest the rest with purpose. And once you adopt this mindset, you stop working just for income. You start building systems that generate income, even when you're not working at all. When people imagine financial freedom, they often picture something extreme. Luxury vacations, exotic cars, endless spending without limits. But real freedom looks much quieter than that. It's waking up without an alarm clock. It's having a full day ahead of you and deciding how to use it. Not based on obligations, but based on choice. It's being able to walk away from a job that drains you without fear. It's saying no to things that don't align with your values without worrying about consequences. It's having time to build meaningful relationships, learn new skills, explore ideas you've always been curious about. Simply rest without guilt. Because at the end of the day, money is not the goal. Time is. And when your basic needs are covered by passive income, work becomes optional. You might still choose to work, but now you're doing it because you enjoy it. You believe in it. It gives you purpose, not because you have to. That shift from obligation to choice is what defines true freedom. Up to this point, everything might sound clear, even exciting. But real financial independence isn't built on optimism alone. It requires understanding the risks and preparing for them. 1. Market volatility. Investments don't grow in a straight line. Some years the market performs well. Other years it drops, sometimes significantly. And if you're relying on that money to live, those fluctuations matter. 2. Sequence risk. This is one of the most overlooked dangers. If you retire or stop working right before a market downturn, and you continue withdrawing money while your portfolio is shrinking, you can damage your long-term sustainability, even if the market eventually recovers. 3. Inflation. Your expenses today will not be your expenses in the future. Housing costs increase. Healthcare becomes more expensive. Daily living costs slowly rise over time. So even if your income stays the same, your purchasing power decreases. 4. Real-life uncertainty. Life is unpredictable. Family responsibilities, medical emergencies, unexpected events. These aren't theoretical, they're inevitable. And they can put pressure on even the most well-planned strategy. So what does this mean? It doesn't mean the idea of living off $500,000 is wrong. It means it needs to be approached with realism. For some people, $500,000 may provide basic financial independence, a simple, flexible lifestyle. For others, it may not be enough. That's why many aim for a larger margin of safety. Not out of fear, but out of awareness. Because true freedom isn't just about reaching a number. It's about building something that can withstand uncertainty. At first, this journey seems like it's about money. Saving more. Investing wisely. Reaching a number. But over time, something deeper begins to happen. You start to change. You become more intentional with your decisions. Instead of reacting to every impulse, you pause and ask, does this actually matter to me? You begin to think long-term, not just about next week or next month, but about the next 10, 20, even 30 years. You develop patience, because real wealth doesn't come instantly. It grows quietly, steadily, over time. And perhaps most importantly, you stop being controlled by money. You're no longer chasing every new trend. You're no longer trying to impress people who don't truly matter. You're no longer trapped in a cycle of earning just to spend. Instead, you gain clarity. You understand what you value, what you actually need, what kind of life you want to build. And that clarity changes everything. Because even if something unexpected happens, even if you lose money or have to start again, you now have the mindset and discipline to rebuild. This is what separates people who achieve financial independence from those who don't. It's not luck. It's not talent. It's who they become in the process. So after everything we've explored, let's come back to the original idea. Can $500,000 really buy you financial freedom? The honest answer is yes, but not in the way most people think. $500,000 is not a magic number. It won't instantly solve all your problems. It won't guarantee a luxurious life. And it won't protect you from every risk. But what it can do is far more powerful. It can give you a foundation. A foundation where your basic needs are covered. Your time is no longer controlled by a paycheck. Your decisions are no longer driven by fear. From that point forward, everything changes. You're no longer trying to survive. You're building a life. Maybe you continue working, but now it's your choice. Maybe you start something new without financial pressure. Maybe you slow down and actually enjoy your time. Because the real goal was never money. It was always freedom. And freedom doesn't come from having the most. It comes from needing the least, while building something that continues to support you over time. So the question is no longer, is $500,000 enough? The real question is, are you willing to think differently, act intentionally, and live differently from the majority to create a life that is truly your own? Your future isn't decided by one big moment. It's shaped by small decisions made consistently over time. And the best time to start is now.